Are you thinking about investing in country ETFs? Well, before determining whether or not to invest, it's essential to have a clear understanding of what a country ETF is. In short, country ETFs are derivatives to bet against various markets such as bonds, equities, and commodities. While the strategy can be successful, it can also lead to significant losses if the market moves against that position. As with any investment, there's always a risk involved, and it's critical to assess your risk tolerance before diving in. The timing of purchasing country ETFs can be tricky, as it's largely dependent on the current market's conditions. When market sentiment is optimistic, it may be a good idea to bet against the market, while pessimistic market conditions may call for a more traditional investment approach. It is important to do proper research and analysis to determine the best time to invest in country ETFs. Additionally, it is vital to remember that investing in country ETFs is not a long-term strategy. These investments are usually used as a short-term hedge against market shifts. It's crucial to have a comprehensive investment plan that accounts for both short-term and long-term goals. Investing in country ETFs can be a viable strategy if executed properly. By understanding the risk involved, timing the market correctly, and utilizing them to supplement a comprehensive investment plan, investors can reap the benefits of buying country ETFs. So let's start to dive into that notion. From this perspective, let's go into the VectorVest software. Why are we talking about country ETFs? You got to have a plan. Well, if you're buying stocks long, you'll notice that as you see on our graph, the market is starting to turn over a little bit over the last 3-4 trading days, down 4 days in a row. We do have an indicator that looks for a market when it's getting toppy. Notice we can clearly see this is the top of the market. We have a candlestick pattern known as a dark cloud cover with some follow through and more follow through and more follow through, and even with a possible 3 exponential moving average crossing below an 8 exponential moving average. Put all of this together. On the high that we've got right here, when the MTI or market timing indicator is at a value of 1.5 to 1.6, the market's looking for a top. We never did quite get there. So why is the market turning over? I've got 3 reasons why. 1, we have a hawkish Fed. The Fed did pause on the most recent decision on interest rates. We paused. I think that he caved in to what everybody else was telling him and he paused. That's my opinion, but I'm not an economist. A lot of people think that he did it for the purposes of not crashing the economy. Well, guess what? He said in the next month, pretty much when it comes to the next decision, he's going to raise interest rates again. Now, maybe I think he may alternate back and forth between months. Raise, pause into the end of the year. I think that might be the way that he goes. He's been on the Capitol Hill testifying in front of Congress, and pretty much he said that. Number 2, China. China's opening or reopening has just been happening, but not happening enough, and it's affecting markets globally. They are the biggest consumer of everything. Well, they have the country that has the most people. My daughter was telling me that India has more people than China. I'm going to look into that. All right. So that's affecting the market, and not only our markets, but markets globally. And number 3, banks. Glenn has been saying for the longest time, there's another shoe to fall when it comes down to the regional banks. And I think another reason why he might have paused is to give them a little bit of reprieve. But he also said on Capitol Hill that a lot of these banks made bad business decisions. I don't know if we're going to continue to bail a lot of these banks out. Now, they haven't yet announced in regards to earnings the write-offs for the losses that they're going to take. We'll see how that plays out. But I think those are the 3 things that are giving us more of a bearish feel in the market right now. So normally the market starts to fall when the market gets toppy. We had a nice little run up here off the market low or a level of support. Run, a do run, a do run. And I think a lot of this was in anticipation that he was going to pause rates. And you think that once he paused rates, everybody would be going, woo, yay. That wasn't the case. All right, so since then, we've pulled off. Again, I'm looking at several different things. The market hitting a high over the last 3 months. Candlestick pattern with follow through. Possibly 3 exponential moving average going below the 8 exponential moving averages. All of these set up for a prime time to start thinking about Contra ETFs. Our fastest, most aggressive timing signal, the primary wave is turned down. Nothing else is yet. So this is a good time to dip your shoe or your toe, take your shoes off, dip your toe in the water in regards to Contra ETFs. So I've gone through and I've made a list of Contras that I want you to keep your eyes on. Let's go to the Viewers tab. Here's my top 8 Contra ETFs for you right now, and I'm going to explain to you why I think that they're important. 1, couple of them have relative timings above 1. That means they're already in an upturn as Contra ETFs. SVIX and ERY both have relative timings, tells us that the market or these stocks are in, or Contra ETFs are in uptrends. I like those right off the bat. Well, what about the other 6? Why would you think about taking advantage of those? Well, let's talk about the places that they're in. Real estate, and that's DRV. Nice move up with a RT at 0.89, not quite above 1, but 0.89. The financials, all right? I think, again, with what's going on with the banks, this may be a good spot to be in. RWM, the Russell 2000. When the market goes down, people get out of the riskier, lower dollar stocks. So that goes for both RWM and TWM. Banks, I think that from a Contra perspective, this only makes sense. And then there's another small cap, TZA. So 3 small caps are on here, and a lot of these RTs are close. TZA happens to be a sell recommendation at the time. How about if you are timing this right, you can ride this Contra from a sell to a hold to a buy. Only one on here is a buy, and that's SVIX. That's on the volatility on the S&P 500. And I think that that's going to rise as the market gets more fearful as to what's going on. All right, last but not least, I'm going to graph these all. I got two other things I want to do. One, I want to graph these, put these on a 3-month graph. Let's go take a look at them. SVIX makes sense. As a Contra, it's already rocking and rolling. Let's talk about ERY. A little bit more volatile in the move. I like the bounce off support, the 3 and the 8. I needed to break through a couple of levels of resistance. I like DRV. Look at that. Nice open candle. The 3 and the 8 have already crossed. I've got a level of resistance sitting at 52.62. Would love to see it break through. And then I've got another level of a swing high right here at about 58.48. All right, let's go to the next one. Look at that. FAZ coming off support, 3 and the 8, crossing RT, not above 1 yet, but it's got some upside, especially if we're just starting to turn over. Remember, we're 4 days off the high, and if the market continues to go down, you're getting in early on these Contras. There's RWM, there's Bank. I'm telling you to keep your eyes on this because those small regional banks are going to have to report some of these losses real soon. This Contra may explode. Let's go to the next one, TWM. That's on the Russell. TZA, small cap, and TWM, small cap, and TZA. There we go. I'm going to show you one other thing. Let's go back to the graphs. Now, these are the ones that I have for you right now. Let's see how they've already performed since that high in the market. Let's go back to the graphs. The high happened on 6/16/2023. I just want to see how they have responded since the market has turned over. Let's go back to the viewers. Let's go take this date back to 6/16. All right. If this doesn't blow your mind, I don't know what will. Let's quick test them all. Look at that, folks. They're up 4.5% in about a week. I possibly am getting you in on these Contras early. I don't want anybody to say after the fact, well, you didn't tell us about this or you wait to the last minute. I'm getting you in on them now. Keep in mind that these are still short-term plays. This is not anything that I want you to go buy and go rock and roll with them long-term, unless the market really decides it wants to take a big pitfall to the downside. But even with that, a lot of these are triple leverage. You want to be very conscious of that. We're using the market. We're using the trend of the market to get you in early. And some of these, and pretty much I could be bottom fishing on these Contra ETFs. Take it for what it's worth. We try to bring the best content we can to help you guys make money in the market. That's what it's all about. So if you like the content, don't forget to hit the like button. Hit the subscribe button if this is your first time at our channel and you like the information. We're trying to grow the channel. Hit the subscribe button, hit the bell icon. Folks, this video is over. And until the next time, see ya. Hey VV Nation, are you still not a subscriber to the VectorVest software yet? Wow. Folks, we've shown our subscribers how to make money in the market for a lot of years. But if you're not a subscriber, let me wet your whistle. Listen up here. I've got a survey. There's a link in the description down below that you can take. Please answer the following questions if you'd like to participate in the 2-week diary study documenting the first 2 weeks of your VectorVest trial. And if it's a match, we will reach out to you for scheduling. Study participants will start a trial with VectorVest and document their experience interacting with VectorVest for each day for a 2-week period. Those who complete the study will be compensated with a $200 gift card and receive a free month subscription to VectorVest. A special note here. Please note that if you're receiving this email and are taking the survey, doesn't guarantee that you will be selected to participate and or receive the incentive. Folks, you've got nothing to lose. Click the link down below and take charge of your investing.